Alright guys, so we're going to go ahead and do the slide 14 for naked Forex video on stacking on trends and swinging long-term trades. So here you guys go.
Alright, so let's get it now. Now this video is going to be based on naked Forex, right? Stacking on trends, identifying those trends where you can stack, swing, and hold and multiply your profits. So let's go into here. So we're on US 30 here on the 4-hour chart. How you identify this, right? So obviously US 30 has dropped a lot. And I was looking at it on the daily chart. And I was like, man, they dropped it quite a bit, so it's got to retrace. It actually retraced pretty good today. And for today, if you were to buy at the very bottom at 33,000, right, at 33,000, and you held it till the end of the day of today, right, if you bought it this morning, Monday morning, and up until, it's already Monday evening here, so a whole day's work, and this is a daily candle that closed out. So that's pretty much almost 1,000-point gain. And if you did one standard, that's 90,000 in profit with one standard. Okay? So that's pretty crazy, right? If you did a one lot. Now I know a lot of people are going to go, well, why would I do one lot? Because this thing can make you lose a lot of money. Yes, it can. So based on one standard, you can make 90,000, right? Because it went up 900 and some points. So you probably like at $93,200 based on what I'm having here at 33,932. Now, how you identify this, right? So going back to the 4-hour, right? So I was looking for US 30 to see if it's going to go down even further. So with this last candle coming back up, this is where I would buy at 33,100, and it ended up shooting all the way up, right? And now it's targeting this, right? This resistance, right? This is resistance right now at 33,949. So if it doesn't break this, then we're going to sell it back down. And I would sell it back down to 33.5 and maybe come back down to retest 33.1. So you're probably wondering, okay, this is probably not a good pair to stack and swing. No, it's not. Not to swing a buy, right? But if you were to held a sell, right, last week, and you held it all the way down, it dropped, almost 2,000 points at the very top here. 1,800 points. So that's a lot of money, given the fact that US 30 fell quite a bit. What happened last week, right? So let's talk about what happened last week. The federal interest rate decision was the same, but the Fed was really hawkish. Hawkish means it's positive for any central bank. They're so hawkish because they plan on doing 2 rate hikes in 2 years, right? Because the inflation is going crazy right now. So with that being said, that's what caused US 30 to go down. What else went down, right? So let's talk about what else went down. US dollar went up. Is US dollar on the 4-hour. Gold went down, right? Gold was the major move going down, right? And I want to highlight what happened here. Major move here. This is what happened last week. 1860 all the way down to 1760. So it dropped $100 from Wednesday to Friday closing. That's crazy, right? Dropped $100 in value. That's a lot of pips to catch, right? Because for every penny that gold moves, that's a pip. So with that being said, that's a lot of pips. You're talking like 10,000 pips the way I'm looking at it. Yeah. So it's crazy. So how do you identify this, right? So gold was peaking, creating a lot of resistance here at 1870, 1875. Couldn't break anything higher. Went back down, tried to come back to retest, and then when the news hit, it went down a lot. In a matter of 5 minutes, gold went down 1865 all the way down 1810. So it dropped $55 in value just on news. Okay, so what was the major critical thing here, right? Could not break, right? Let's talk about, right? The first 2 weeks of June, right? This is where it was sitting. There was just major resistance at 1910, 1905, 1900. Could not break anything past that, and it ended up just going down lower. So with this move going down lower, it already broke this support price, right? And it came back and it sat here and it went down even further. So I'm gonna zigzag this, right? This was the initial move that went down. This is the second initial move that went down, and this is the major move that went down. So three legs, right? I'm talking about the 3 major legs that went down. The first one was the crucial one, right? Because then that's signifying, oh, hey, this could be a good opportunity to hold a sell and swing it. So with that being said, whoever bought gold and thought gold was going to keep going up, that was going to be crazy, right? So I didn't buy gold. I just saw the fact that gold just kept going down and didn't retest anything higher. Then I just kept placing sells. So where does this come into play, right? Where you're going to stack and swing, right? If you missed out, right? If you missed out on this first one, then there's this second one right here. And if it's not going to retest higher, it's going to test lower. You know what I'm saying again? If it's not going to retest higher, it's going to test lower. And it's going to break lower. With that being said, this was a major key component that sent it go down, right? Fundamentals were in play, which was the Federal interest rate decision, right? The press conference from the FOMC, Federal Reserve, right? Major positive news for U.S. dollar. U.S. dollar was positive from Wednesday all the way till Friday, end of closing. So that's a lot of hints, right? That's a lot of knowledge that I'm giving you guys right now, and that's a lot of content that's coming out right now. And so you have to gain the experience in order to see this, so that you can justify yourself with your analysis on technical analysis and the fundamentals too. But your technical analysis needs to be legitimate to where you can just solely trade on technical analysis. Okay. I used to be a fundamental trader, but now I am 90% technical and then 10%, right? 10% fundamental now. You can just strictly look at the charts and just trade. You don't have to look at news. But I will be talking about news on the next slide. So there you guys have it. You guys probably wondering, okay, so what do we do now, right? If gold is going to be like this, there is no point stacking and swinging, right? There's no point. Because now you're looking at consolidation from 1760 to 1794. And I talked about this in my previous video, that if something's going to if the pair is going to consolidate, you're waiting for a breakout. And it needs to break out that structure zone. Without that, there is no trend, because it's just consolidating between two prices that are very narrow. Okay? With a very narrow type price range, there is no point stacking and swinging or trying to hold a trade. You're better off scalping and going to the 15-minute or maybe the 5-minute chart, so that you can actually get a chance to catch a couple pips. Right? You have to adapt from swing to scalping, back to scalping, back to swinging. But you can't go wrong scalping the charts during the day and then a little bit at night, and that'll be part-time income for you. That's what I'm doing. 90% of my personal trading now is just scalping. 10% of it is swinging. Swinging takes a long time to understand, and also to build that momentum, multiplying profits with a bigger account. Okay, so that you can multiply your profits. With a small account, swinging and stacking on just 10, 15 open trades can blow the account. Even just 5 open trades, okay? Depending on what your balance is. So justify that before you decide to do stacking and swinging, okay? Other than that, I will see you guys in the next videos.
Alright, we are done. If anyone wants this PowerPoint, please let me know. I will give this to you for free. Thanks for following this channel and supporting this channel. I appreciate you guys, all your support. And that is it, guys. Have a great Wednesday.